my order flow trading strategy revolves around these three components, and they are very simple. I only use three confluences to take my entries, and there's one extra that I'm going to talk about later on in the video. But all you really need to trade successfully with volume profile and order flow are these three components. So first we have the daily bias. So we're going to find out our daily bias using volume profile. And I'm going to teach you all of these three components in this video, including daily bias, how to spot key levels, and how to actually take your entries using order flow confirmation, AF, absorption, and follow through. So let's talk about daily bias. How do we find our daily bias? Now, you can use this technique on TradingView itself. However, I would highly suggest that you get one of the order flow tools platforms out there. I personally use Deep Charts because it's very user friendly, okay? But you can use any other tool out there. I'm not affiliated with them. So once you open up Deep Charts, the first thing that I do is I go here to templates, or first of all, what I would do is go here, price chart, CME, and NQ. So first of all, I open NQ chart, and then I right click here, and then I go to template, then load, shared, and then go full version, Fabio, NQ, and electronic trading hours profile. So what essentially it is doing, it's plotting the volume profile from 9:30 till 16 New York time for the previous day. So basically it's showing you a volume profile of each cash session. The cash session is a New York session from 9:30 till 16, okay? So I go here and disable the volume composite, and now we have all these days here, right? And it is showing us the volume profile. So how do I determine my bias? That is very important. So I have this schematic over here. So if we are continuously building value to the downside, so we have, let's say, Monday over here, Monday, Tuesday, and this is Wednesday. And this right here is Thursday, right? Monday, Tuesday, Wednesday, and Thursday. Thursday is going to be the trading day, okay? So if we are going down with the volume profile, so the point of control is here, then on Tuesday, the point of control was even lower. The entire value shifted lower. And then on Wednesday, we also have point of control lower. Well, our bias for Thursday, which is today, in this example, is going to be bearish, okay? So that is pretty much how we determine our bias. Similarly, if we have Monday, Tuesday, and Wednesday over here, so if we have the point of control shifting higher with each day, so this is Monday, Tuesday is higher, and then Wednesday is even higher, we can assume that on Thursday, we are going to be bullish until we reach a key level. Now, with that information in mind, what we can do is find our bias, right? So if you look at it from over here, we have, let's say this is Monday. Okay, so Monday point of control is lower than this. On Tuesday, the point of control, the value is here, right? So we have the new week opening gap or whatever this gap is, right? And then on Wednesday, we have it even lower. So if you look very closely, you can see the point of control is lower than this day. This gray shaded area is rejection. So we couldn't accept value above, right? So we rejected from the value area high of Tuesday in this case, for example. Okay, so this value area high of this day, we went above it and then we rejected off sharply. So our bias for this day trading day over here after 9:30 is going to be bearish. Why? Because we are continuously making, the point of control is shifting to the downside. Okay, so we have our bias. This is how we determine my bias. If the price is continuously making point of control higher, for example, we have point of control here, we have point of control higher. So the bias for this day is going to be bullish, right? And then we have point of control shifting lower, right, from this one. So this is the point of control, but then on the other day, the next day, we had point of control here. So our bias for this day is going to be bearish, and you can see we dropped low towards this level, towards the point of control here. Then you can see that we have point of control here, and then point of control shifting higher, right? So on this day, this was a bank holiday, and you can see that we pretty much just consolidated but we build value higher, right? So on the next day, we did go above. We had a strong push to the upside, but where did we go? We went into this value area high that was untapped from this day. And then we had rejection, right? And then the point of control closed below this point of control. So bias for this day would have been bearish. So we had a bearish day, right? And then on this day as well, right, we had a bearish day. We had a rejection after the market opened. So we went above, right? So accumulation, manipulation, distribution, you can think of it like that. When I go into the key levels, I'm going to teach you how to identify key levels, but pretty much this is how I determine my bias. Now, let's talk about the key levels. So we have multiple key levels, and these are the most important one, right? So first thing first, we're going to have our overnight volume profile, right? So for example, we're going to have the value area high, value area low of the overnight session, right? So these are our key levels from the overnight volume profile. What is overnight volume profile? So it is from 18 till 9:30, right? So you can write out like that, and you're gonna have the value area high, the value area low. These are your key levels. Now the next key levels that you need to look at is if you go over here towards this level here. So let's say that this is the current trading day, right? And we have a bearish bias. Now our key levels are going to be the previous cash session value area low. Since we are bearish, we are only looking for short positions, right? So this is going to be our key level. Then we have also, when we are looking at the previous day levels, we can also consider the point of control as our key level. Okay, when we're looking at the overnight session, we only look for the value area high and value area low as our key levels, right? But when we're looking at the previous day cash session, right, we can mark out all these three levels. So these are our key levels, guys, okay? I'm looking for my entry confirmation off of these three levels, okay? Pretty simple, right? Now, when price approaches one of these key levels, this is what I'm looking at. This is what I want to see, right? So let's say we have a key level over here. So this is the, let's say, value area high of the previous cash session, and our bias is bearish. So price after the market open, which is at 9:30, it rallies up, and then we go above here into the key level, right? And now at the key level, this is where we're going to use the absorption setup. So what I want to see is a cluster of aggressive buyers stepping in here. So we have aggressive buyer, right? Let me just zoom in a bit here. So we have aggressive buyers stepping in here, but they're not able to break above this level, right? So a lot of these aggressive buyers are trying to push above this level, but they're not getting a follow through. Now these buyers are getting absorbed. That is step one, which is absorption. Now what is a follow through? Now since our bias is bearish, we need to see price, first of all, closing below all these aggressive buyers that we have over here, like this. And then I want to also see aggressive sellers stepping in here that get a follow through. So if we see aggressive seller within the body of a bearish candle, that is a follow through. And also we need to see price closing below these aggressive buyers. Now, once we have that, guys, this is going to be my highest probability short setup, okay? I'm going to take a short setup at the close of the candle. I'm going to put my stop right above these absorbed buyers, because if price goes above these, they're going to reload and they're going to push the price up. So in that case, our idea is going to be invalid. So this is going to be my entry. And then what we can do is we can have the overnight volume profile drawn out. So what we can do is target the point of control of the overnight session, right? Or we can target the value area low of the overnight session like this, okay? Very simple trading strategy, okay? Also, let me give you an extra confluence that I use, and those are gamma levels, okay? I've explained gamma exposure in my previous video, one before this one, okay? So I use this platform called Mentor Q, and it basically gives you the gamma condition for the current day, right? So if we are in a negative gamma condition, we're gonna see breakouts happening, right? So if we have, like, let's say our bias is bullish and we have the value area high of the overnight session, there's very high chance that we're gonna break out, okay? So in a negative gamma regime, we're gonna have volatile markets. So we're gonna have breakouts. We can also use this with the opening range breakout strategy, right? So in a negative gamma environment, we're gonna have a bearish price action. Also, it kind of gives me key levels. So if these key levels align perfectly with, let's say, if I want to take a shot here and there is a GEX level over here or a gamma level, right? That is an extra added confluence. Again, you can watch my previous video on this. And if you want to get this platform mentor queue, there's a link down in the description. You can get 30% off by using my link, okay? That's an extra confluence and it has pretty much a lot, right? If we are in a positive gamma regime, that's where we see failed breakouts. So we don't get breakouts, but we get like failed auction setups, right? So these type of setups where we tap into our key level and we see absorption, failure to break out above this level, and then we see aggressive sellers stepping in. And those are the type of conditions best for this type of setup, the mean reverting one, right? Again, the link down in the description, okay? And pretty much this is it. And I'm going to give you guys some examples for this strategy. I'm going to also show you some breakout setups. So there are two ways that we can get breakouts, right? So let's say that we are in a negative gamma regime, right? And let's say that we have a bullish bias. So this is our overnight value area high, or we have, let's say, the value area high of the previous cash session, right? So if our bias is bullish, we can either look for a trade from the value area low, but since when we are in a negative gamma regime, it's very unlikely that price will retrace back after the open into the value area low of the previous cash session, right? So what we can anticipate is that if we get a break above the value area high of the previous cash session, right, we can see a breakout. Now I also use breakout confirmation with order flow, right? So negative gamma regime, it means we're gonna get breakouts successfully, right? So we have our bullish bias, we have the overnight value area high of the previous day cash session value area high. Price goes up here, and then we get aggressive break above this level with aggressive buyers stepping in that get a follow through. What is a follow through? A follow through is when we have aggressive bubbles. That's what I'm going to show you in the examples later on in the video, is when we see aggressive bubbles within the body of the candle. So for example, we have this candle, right? And we see aggressive bubble within the body of the candle and not the wick. So this is a wick area of the bullish candle, right? If we see aggressive buyer here, they got absorbed. So these buyers didn't get a follow through because we rejected off. But since we had buyers within the body, this portion over here got a follow through, okay? So that gives us an idea that the buyers are getting a follow through. Once we get a break like this, there are two ways. We can enter directly off from here, market buy order. We can put our stop loss below these aggressive buyers, or we can wait for a retest of the value area high that was broken. And then what we can do is look for this type of setup, okay? That's extra confirmation. So we see sellers getting absorbed here at the retest of the value area high, and then we see aggressive buyers stepping in. So that is extra confirmation that you can use just to be on the safe side, and that is going to give you the highest probability setup, okay? That is pretty much my entire strategy. Let me give you guys some examples and then I'll end the video. All right, guys, so here is example number 1, and we're going to look at this day, what happened on this day. So our bias was bearish for this day. Why? Because if you look at it here closely, the previous day point of control closed below this day over here. So point of control here, point of control here, and also you can see when we have a gray area over here, it means that we rejected. We couldn't accept value above this value area high, right? So we pretty much just rejected off this level. It means there's more potential to the downside. So again, we have these three levels. So value area low, point of control, and the value area high. So in this case, we have the point of control right? So we're gonna mark this out as red over here for this day. So on this day, when price approaches this level after 9:30 a.m., right, we're gonna look for short positions. So if I go over here, this is the point of control, right? And at 8:30, which is basically 9:30 on TradingView, the real time, on deep charts, it shows 8:30, right? Because there's a timing issue. So 8:30, this is 9:30. So after the market opened, we went up, right? So you gotta be patient for this setup. Once we approach this level, what we are looking for is AF setup, right? So absorption and follow through. So first at this level, since our bias is bearish, what we are looking for is absorption of buyers. So you can see we have 182 buyers stepping in. And by the way, if you want to get this indicator on deep trades, you want to go here, go to indicators, volume, and then we have deep trades over here. For my settings, I'm using these as my default. So these are the settings, then plot settings are over here, and that's pretty much it. So a lot of buyers stepping in, big circles, right? So bigger the order is, bigger the contract size is, the bigger the circle is going to be. So you can see we have some small circles. You don't want to pay attention to those circles, right? We need aggressive participants showing us the direction of the market. So over here, a lot of aggressive buyers are stepping in, but they're not able to break above this level successfully, right? So all these buyers are getting absorbed. Now, if you look at it closely, right, we want to mark out, first of all these aggressive buyers like a level, right? So these aggressive buyers is like a box. Then we see aggressive sellers stepping in. So this candle specifically, you can see this purple candle, we have aggressive sellers within the body of the candle. And we also closed below this cluster of aggressive buyers. Now that is going to be my short position, guys. Why? Because we are trading with the bias. We have our key level, and we're going to put our stop right above these aggressive participants over here. And then we can pretty much, where is the daily volume profile? Yes. So we were also above the overnight value area high of this current day. And you can see we have point of control down there. So this could have been your target, right? So 5.95 RR, that was absolute banger of a trade, right? And then you can see that we approached this level on the same day once again to the tick, and we also went above the value area high of this current day. And then what do we see? We have aggressive buyers stepping in here, but no follow through. We have more buyers on the way, right? And they're not able to again break above this level. And then if you look at this bearish candle over here with 50 sell contracts, right, that is going to be your short position. And also we closed below all these aggressive participants, right? If you want to be a little bit more safe, right, you can wait for this buyer to also get inversed, and then you can take a short position. But then I would take a short position right over here, put my stop right above these aggressive participants, right? And I would pretty much target, again, what we can target. We can target pretty much the value area low of the overnight session, right? So right here, you can see, and by the way, this is not exactly overnight. It is the developing volume profile that starts from the overnight, which is from 18, and it's going to keep on developing. It's fine to use that as well if you want to have like precise levels for the developing when the day is developing, but usually you just need like the overnight volume profile. Okay, so this would have given you 8.24, right? And if you wanted to add in a bit more, you can see that once we approach after we closed below the value area high, we went back up and retested this level. And what happened here, guys? We had aggressive buyers not getting a follow through and not able to reclaim above the value area high. And then we see aggressive sellers stepping in that got a follow through, right? And we also closed below this aggressive buyer over here. Now this would have also been your short position if you wanted to hold, right? And again, you could have targeted the value area low, and you could have added in, and this would have given you. So look at these three trades just using this simple trading strategy, guys. Let me give you guys another example. All right, guys, so here is another example, and we're going to look at what happened on this day specifically, right? So our bias is bullish. Why? Because we're making the point of control higher. So we have point of control over here, point of control over here, point of control over here. Now, when we have a same next day within the value of the previous day, I can merge the volume because we pretty much just consolidated and it's not giving me much information. So on deep trades, deep charts, I can right click on this day, go over here and merge plus. And it's gonna merge these 2 days, right? These cash session volume profiles. Now you can see we have the value area low, which is down there. So we can mark out this buying zone over here. Now let's go over here and see what happened. So we have our zone over here, right? Now notice what happened. We approached this level with a lot of aggressive sellers. So many sellers that I can't even see what's happening, right? 217 contracts, 124, 40. But since our bias is bullish, right, we only want to take long. So we got to sit tight and see what happens. So we did break below this level, but immediately we reclaimed this level. And right here, if you look closely, if I zoom in, you can see we had aggressive buyers getting a follow through, but within these bullish candles, we also have sellers that are not getting a follow through, right? So the buyers are definitely in control here. So once we reclaim above this level, right, and we also close above these aggressive sellers right over here, with this candle, this could have been your aggressive entry, stops below over here, and you could have went for 1 to 2 or even like 1 to 3, right? Now price approached this level once again, right over here, these aggressive participants level, right? This is also like a key level, but like you got to use it with proper context. And when we approach this level, we started seeing sellers being absorbed. So a lot of aggressive sellers stepping in here as well, but not able to get a follow through. Now, if you look at here, we have all these sellers in close proximity, right? And then we see this one candle that has absorbed sellers. So this is sellers, aggressive sellers in a bullish candle. That tells you that these sellers got absorbed and the buyers are in control, right? So in this type of example, you don't really need to see aggressive buyers because it's telling you a story already. The sellers are stepping in, but there's no follow through and buyers are winning. And this is my entry over here for another long. Then once again, we approach this level, this key level, this green level, the value area low from the previous day, and we get absorption one more time with this huge sell contract, right? But again, no follow through. And then what we can do is mark out these aggressive participants in close proximity, right? And then what we can do is look for a close above, right? We had aggressive buyers and then they finally reclaimed these aggressive buyers and now we are pushing up. And this would have been your long position. Stops, go below the key level down there. And pretty much you would target 1 to 2 or 1 to 3 risk reward ratio. Isn't that simple, guys? If you watch this video again and again, you will learn. I promise you that. Now, let me give you guys one more example for a breakout trade that you can take. All right, guys, so here is a breakout example, okay? So we have a volume profile drawn out over here. Now, this could be the overnight volume profile, right? Or it could just be a huge consolidation, right? But ideally, if you want to keep things mechanical, I just use the overnight volume profile. But this is just to show you how a breakout would look like, right? Now, let's say that we are in a negative gamma regime, right, using Mentor Q, right? And we know that we're going to get successful breakouts, right, to the upside or to the downside. Now, if you have a bullish bias using daily the cash session volume profile, you can take these setups with high conviction. So notice how we were just consolidating over here. So we have the highest point over here. So what we need is to mark out the highest point over here. And we need to see what happens at the break. So notice when we broke above this level, when we broke out, we had aggressive buyers within the body of the candle, right? Now that, ladies and gentlemen, is a follow through, and that is like aggression getting a follow through. This is giving you a signal to go long because literally this is, you know, you can see it with order flow. This right here would be my long entry. I'm not even like thinking about any other thing. I'm going to put my stop below these aggressive participants, and I'm going to target 1 to 2 risk to reward or 1 to 3 risk to reward ratio. So why is this breakout valid? Because we didn't see buyers getting absorbed. If we saw buyers getting absorbed at the wick area over here, that would be low probability, right? But since we have aggressive buyer, a big order within the body of this candle, right, that shows aggression getting a follow through. So thank you so much for watching. Comment down below if you have any questions, and please subscribe. We got to get to 200K subs by the end of this year. Hopefully we can do that. And again, Mentor Q, probably the best gamma exposure tool out there. 30% off for you. Link down in the description. I'll see you guys on the next one. Take care. Goodbye.